All right, guys. So tonight we're going to take it all the way back to what critic is, what critic is about, and what does critic consist of. Because a lot of us actually don't understand how critic works. So maybe if we understand how critic work, then we will have better credit scores, right? Some of us may ask, what is credit? What are the credit factors? Or what are the percentages? Or how do I actually get to the 850 score? Well, I'm here to tell you tonight. All right. Grab your notebook, grab your pens, and let's get started. So, credit is basically the obligation for you to borrow money and be able to pay it back. All right. I'm going to say it again. Credit is just basically you being able to borrow money and then pay it back, right? So when you go to apply for a credit card, personal loan, auto loan, mortgage, or whatever it is that you're applying for, you are filling out a credit application. And at that time, they will pull your consumer reports, which is Equifax, TransUnion, and Experian, and then they're going to review the actual report itself. Okay, so that's how that works. And that's exactly what credit is. Credit is you being able to borrow money and pay it back. Okay, now the key factors of your credit score. There are five key factors. There's your payment history, the amount owed, which is like your credit usage, or the debt that's owed, the length of credit history. You have your credit mix, and then also you have your new credit. All right. And y'all gonna see me look down and glance down a little bit because I always keep my notebook. I always keep my notes about my discussion so I don't skip anything to make sure that you guys have all that you need, right? So, with that being said, let's talk about the credit factors. Okay. Let's talk about some credit factors here. The first credit factor that we have is payment history. Payment history is top, the top number one credit factor. It's 35% of your credit score. Okay. And then after that is the amount owed, which is 30%, or credit usage. And then you have your length of credit history, which is 15%. The credit mix and new credit is 10%. All right. Keep those percentages in mind. Remember, I hope you guys got your notebook and your pens because I'm going to start calculating some things here for you so that you can understand how to get to 850. Now that I have given you guys the credit factors, now I'm going to tell you how to get to the 850 score, right? So your score ranges from 300 to 850. Now, how do you go from 300 to 850? Well, let's do some subtraction here. What is 300 minus 850? 550, right? So let's go back to our credit factors. Let's get to 850. What's 35% of 550, right? 192.50. Okay, now these are the points that you get for making your payments every single month on time with your credit cards, auto loans, personal loans, mortgage, whatever account that you have. This is how many points that you are receiving every single time, right? This is the points that you need to be hitting. Amount due is 30%, which is the debt, the credit usage. So 30% of the 550 is 196, okay? 196. Now, the list of credit history, 15%. Well, what's 15% of 550? 8250, right? 8250. Now, what's 10%, which is the credit mix? 10% of 550 is 55. Same thing as far as the new credit. 10% of 550 is 55. Now, this is how you get the 550. You're going to calculate all the percentages that we just did. So the payment history, we got 192.50 points. You got the 165 from the amount owed, which is the credit usage, the debt, the length of credit history, which was the 8250. And then, of course, the credit mix and the new credit, because they're 10%, they're 55 points each. That is a total of 550 points. This is what you need to get to 850. So just imagine you paying your payments on time, You've had an account open, so for let's say 7 years, account paid on time, the account is open, you have not closed that account out. Let's say it's a credit card account, right? Your usage is 10% or even 12% is not bad, right? And then let's just say you have a credit card, you have an auto loan, and then you have a personal loan, but all of your accounts are in good standing. There's no late payments, no charge off, no collections, nothing. And then, of course, you only have just 3 inquiries on your consumer report, guys. Just 3, not even 3, or maybe 2, or even 1. That's better. Okay. No more than 3 inquiries. That's the new credit. When you hear new credit, it means inquiries. How many times are someone pulling your consumer report? How many times are you actually going in and filing those credit applications, filling out those credit applications? That's what new credit is, okay? The credit mix is just what I explained to you. If you have a credit card, a personal loan, or if you have an auto loan. All right, just think about if you guys had all of this set up on your consumer reports, you would be at your 850, right? Now, think about if you're a lender. Let's say you're a lender and I'm a consumer, okay? Let's just say I have like 3 credit cards, 1 personal loan, 1 auto, okay? Let's just say I have the auto that I have, it's been placed in collections, and then I have 1 credit card where I have maxed it out. Okay, I have maxed out the credit card, my credit card usage. Let's just say my usage is 58% and I have a charge off. And I need to say, hey, I need to get me a car. I don't have any transportation. I go and I fill out a credit application. I guess use dealerships for an example. So a dealership, that dealership gonna say, 2 things. One, they most likely going to deny you, or let's just say that one account, it's been closed for like 2 years. That charge off for the auto loan's been closed for like 2 years. And they're like, okay, we'll give you a chance, but you're gonna have some really high interest rates. They're gonna ask you to put down a crazy amount of down payment on it for you to get the car, right? That's how it works. But we don't even want to get to that point. The thing is, we want to be able to have the lenders or any companies that we're with when we're filling out our credit application, we want them to be able to pull our consumer reports and see that we're trustworthy, that we can borrow money and pay it back on time, that we're able to be responsible for the money that's given to us. So when we do go and ask for a credit limit increase, guess what? They're going to give it to you, because why wouldn't they? Why wouldn't let's just say Navy Federal for an example, why wouldn't Navy Federal give you a credit limit increase if you already have like 3,500 and you've had this account for like a year and you've always paid on time and you've been between that 10 and 15% of that credit usage for that card, and you've always paid back on time or paid a little bit more? Why wouldn't they give it to you? Right? They're going to give it to you because your account is in good standing. They're going to look at your TransUnion, because they fair do look at TransUnion, but they also do look in their internal scores. Their internal scores goes based off the trust that you have built with them. So if your credit card came from them, you have a good high credit usage, a good low credit usage, you guys excuse me, but a high credit limit, they're going to give it to you. Because again, you've had the credit card, let's just say for like 5 years, you've paid it on time, you've never been late. So why wouldn't they give it to you? I always suggest to my clients that you go through your bank or the credit union, because you can build trust, you build your internal scores, and as long as they see that you're trustworthy and you will pay back what they're giving to you, they're going to give you anything that you ask for. They're going to give you anything that you ask for. So this is how you build your credit. Okay. Again, credit is nothing but borrowed money that's given to you and you paying it back. Okay. That's the only thing credit is. Your credit factors again is the payment history, which is 35%, the amount debt that you owe, which is 30%. Then for credit history, which is 15%, and then new credit and your credit mix is 10% each. All right. All of that percentage with those points that I give y'all is going to give you the 550 points plus that 300 that you're starting with to get you to 850. All right. That's why I broke it down to you guys the way that I broke it down so that you can understand how to get to your 850. So again, let's go over it one more time just to make sure that you guys understand it. The score ranges from 300 to 850. So 300 minus 850 is 550, right? We need 550 points to get to 850. So what I did was I took the percentages per the credit factors and I multiplied it by that 550 to get the points that I need for each section so that I know this is the points that I'm going to receive when I'm making my payments on time. Okay. When I'm keeping my active open accounts that's in good standing open for 7 and 9 and 10 years. If you guys have credit cards also, or even a personal loan that you've paid it on time. As far as the personal loan you paid on time is over and done with, tell them do not close the account out, leave the account open. You want to get that 82.50 points for that length of credit history for that long time that you've had that account open on your consumer report. Same thing as credit cards. Keep the account open if you are not using it. All right, now every 6 months, use about $10 or $15. Pay it back just so they do not close the account because you are not using it. Okay. All right. So now that you guys know exactly what credit is now and what's those 5 credit factors and how to get to your 850, let's go ahead and let's get to it. I'm gonna put a link attached to my video so that if you guys need help, you can schedule a consultation. My consultations are free and my calendar is open. Go ahead and book your consultation if needed.